Hi, and welcome back again. We're taking a look at the most recent iron condor trade on Tesla, taking advantage of implied volatility and skew that is reaching extremes. So, pricing on options, looking to take advantage of that. Hence the term the vol guy edges and hedges. So let's jump in and take a look. First of all, here's the actual trade recommendation that came out on Tuesday for the one of the services I provide ideas to, Option Cobra, Iron Condor trade on Tesla. I talked about it on the Schwab network as well. So it simply was going out and selling the traditional December 20th 450, 455 call spread, and at the same time selling the 350, 345 put spread. At the time, Tesla was trading right around 400 bucks, give or take, so about 50 points out of the money on each side, getting a dollar net credit for basically a week and a half trade. So 25% return on risk as long as the stock didn't move more than about 12% in either direction over that week and a half time frame. IV was still very elevated at the 76th percentile, so option price is rich. You get more for selling the iron condo, or you can get the same net credit but get further out of the money, or combine the two, kind of what I did, get a little more net credit and get a little more cushion. And we also had a 60% rally in Tesla since that November 6th election, so definitely was getting overbought. I don't think the stock's coming down hard anytime soon, just really looking more for that rally to maybe slow down, doesn't even have to stop, right, but not go up at that torrid pace. And as I said, having about a 50 point cushion on either side. So here was the end of the day, the trade. So that spread certainly could have gotten done a little bit better, closed at about $1.08, and you can see selling about a 65 IV on the trade. You can see that implied volatility generally, right, on the short-term options, lifting off to the highest level we have seen. This is post-earnings, post-election. Normally a big rally in the stock will contract implied volatility, but because of big upside call buying in Tesla, everyone jumping on board the, I guess, Musk appointment to the Department of Government Efficiency and so forth has made implied volatility along with the stock price get to extremes. More importantly, the term structure volatility, which is the difference between the IV on the out of the money puts and calls, similarly distanced, right, has now flipped hugely to the call side. Normally not the case, right? You can see that the spread between the 25 delta put less the 25 delta call, right, now reached a hugely negative level. In other words, call IV trading at a big premium to put IV. Normally you see the reverse of that, or more of a flat environment, but because of this over exuberance, we saw that skew reach extremes. Another reason to look for that rally to slow down. The last time it reached an extreme was July 5th, and if you take a look at the chart, you can see the last time the skew was this inverted was back in July, as I just pointed out, which marked a significant top in Tesla, right? Similar kind of rip-roaring rally here. Seeing it again here, stock getting overbought to extremes similar to back here. Certainly 9-day RSI reached over 80, starting to finally weaken here. We're also seeing MACD hit extremes as well. Bollinger percent B got over 100, right, starting to weaken, as we can see implied volatility here at extremes as well. So you get more for selling that sort of iron condor trade. The stock also trading at a huge premium to the 20-day moving average. You can see previous times, right, where you saw these spikes above the 20-day moving average. Normally you saw a contraction back to it, which would put it right at that 350 level. Really don't need it to do anything but not continue to head appreciably higher here. The stock did have kind of a reversal day, made a new intraday high at almost 430, reversed and closed lower on the day. That may mean a sign of this, just unrelenting buying is maybe slowing down here. So that's why we jumped in, took advantage of high implied volatility, as we noted here in Tesla, both on the skew side, right, and also on generally implied volatility, right, to sell a iron condor trade that is neutral in nature and just looking for the stock not to continue to rip higher over the next week and a half. So hopefully explains the rationale behind a lot of the trades we do. Until next time, as always, here's the good trading. Take care.